7 million NTD. It sits there on the screen, a digital mountain of potential that promises an end to the daily grind. You stare at the digits, letting the weight of the number sink in. This is it, the finish line. You have mapped it out down to the last decimal. Park the capital in high-yield ETFs. Sit back and watch the cash flow. 70,000 NTD every single month. It feels like a heartbeat, steady and reliable. You imagine the morning routine, coffee on the balcony, no alarm clock, and the quiet satisfaction of knowing the deposit has already hit your account. It is not just money, it is time reclaimed. You run the numbers again just to be sure. The math looks flawless. The dividends roll in like clockwork, a golden stream that covers every bill, every whim, every necessity. You feel the tension of the last decade finally leave your shoulders. You are not just saving. You are building a machine that feeds you. The future looks like a long, uninterrupted weekend. You lean back in your chair, eyes fixed on the brokerage app, convinced you have solved the riddle of retirement. You have exactly what you need to never work again. But stop. Look closer at the transaction history. You see the payout arrive, but check the stock price on the morning of the ex-dividend date. It does not stay put. The market corrects downward by the exact amount of the dividend distributed. If you receive 70,000, your total holding value instantly shrinks by that same 70,000. There is no magic here. The fund is not creating value out of thin air. You are holding a portfolio that is slowly bleeding its own worth. Every deposit you celebrate is simply a forced liquidation of your own principal, packaged to look like interest. You are not earning a return on your investment. You are merely withdrawing the money you already worked to save. The total value of your account is not growing. It is tethered to a downward trajectory, masked by the rhythmic ping of notifications. Your 7 million is not a mountain. It is an ice sculpture melting under the sun. You think you are living off the interest, but you are actually consuming your own foundation. The machine you built is not feeding you. It is eating itself, and you are the one holding the spoon. If the market stops climbing, where does the cash come from? The fund managers are not wizards. They have 3 levers to pull: actual dividends, capital gains, or the equalization fund. When the market goes flat, the dividends dry up and the gains vanish. This is when the charade begins. To keep the monthly deposits hitting your account, they dip directly into your net asset value. They take the core capital you invested and redistribute it back to you as a payout. It is a shell game. You watch the balance in your brokerage app and see the nominal value decline, but you ignore the rot because the monthly cash flow remains constant. You treat this as a steady income stream, while they treat your portfolio as a reserve to be drained. Every time you see that dividend notification, realize what is happening. They are cannibalizing the foundation of your future to maintain the illusion of current performance. You are not witnessing wealth creation. You are observing the slow, systematic liquidation of your retirement fund. The managers maintain the appearance of yield, but the actual asset base is eroding under the weight of these forced distributions. You are the one funding your own payout, one slice of capital at a time. 10 years disappear in the blink of a cursor. You log into your brokerage account, expecting to see the fruit of a decade of discipline. You scroll past years of those rhythmic, deceptive monthly notifications. You reach the bottom line. The initial 7 million has not grown. It has been sliced in half. 3.5 million remain, standing like a ghost of your original plan. You look at the monthly income column. It is not the steady 70,000 you once banked on. It is a fraction of that, a thinning trickle that barely covers basic utility bills. Your heart hammers against your ribs as you toggle through the history. Every payout you once celebrated was a withdrawal of your own life savings, disguised as profit. The market did not fail you. Your strategy failed the market. You stare at the screen, the numbers static and unforgiving. The mountain of capital you intended to climb has eroded into a molehill. You are 10 years older. Your retirement window is closing, and the engine you built to carry you into your later years is sputtering out. The silence in the room suddenly feels heavy. You are not holding a fortune. You are holding the wreckage of a decade-long mistake. The nightmare does not end with the shrinking balance. You open the tax summary, and the true cost of your ignorance crystallizes. Every single monthly payout you received was not just an erosion of your principal. It was a taxable event. The government treats these distributions as income, regardless of the fact that you are simply retrieving your own original investment. You stare at the line items. A 20% income tax deduction hitting you hard, followed by the second-generation health insurance supplement. It is a double strike. You are paying a premium to liquidate your own retirement fund. Every month, you have been effectively volunteering your own capital to the tax authority. You calculate the total leakage over the last decade and the air leaves your lungs. You are not earning interest. You are paying for the privilege of watching your wealth evaporate. It is a cycle of financial self-harm. The system is designed to strip mine your account, taking a percentage of the cash that was already yours before it even hits your bank. You are actively funding the drain on your own future, and the receipts are right there in front of you. You are not a wealthy retiree. You are a taxpayer paying to lose money. You slam the laptop shut, the screen going black, and the room feels instantly colder. The tax documents lie on the desk, a pile of proof that you have been working against yourself. You need an exit. You open a new window and start searching, not for yield, but for power. You find the path that the dividend chasers ignore. You look at market cap weighted funds like 00850. You look at the titans like 2,330. The difference hits you like a physical weight lifting off your chest. Here, the wealth compounds, and the tax collector does not get a seat at the table. In Taiwan, capital gains on these securities are tax-free. Your money stays inside the machine, growing by 8 to 10% annually, unburdened by the constant tax drag that gutted your previous portfolio. You watch the charts. These companies are not just paying you back your own money. They are building value in the structural engine of the global economy. You feel the shift in your gut. This is not a mirage. This is an engine of growth. You realize you have the power to stop the leakage. The panic recedes, replaced by a cold, sharp clarity. You are no longer a victim of the trap. You are ready to dismantle it. Now, you take the wheel. You discard the forced, inefficient dividend payout model that bled your account dry. You implement a dynamic withdrawal strategy instead. You do not wait for a fund manager to decide when to liquidate your assets. You sell only what you need, exactly when you need it, and not a cent more. You pull up your portfolio interface. You calculate your monthly burn rate, verify the total, and execute a surgical sale. It is a precise, controlled action. The remaining 98% of your capital stays locked in the market, completely untouched, continuing to compound. It is protected from the phantom tax drag and shielded from the erosion of inflation. You watch the numbers on the screen. The principal is not evaporating. It is breathing, expanding, and working for you. You realize that your wealth is no longer a leaking bucket, but a fortress. By keeping the vast majority of your assets invested, you allow the market engine to drive your future. You are no longer trading your long-term security for the temporary false comfort of a monthly deposit. You are building a self-sustaining engine of growth that respects your capital and maximizes your future freedom. Look at the historical data. The proof is etched into every chart you open. The high-yield portfolios have stagnated, their value eroded by years of forced liquidations and lackluster returns. They lose real purchasing power every single year as inflation outpaces their meager payouts. Now, compare that to the surge of the tech giants. Switch the filter. Watch the lines climb. By holding stocks like 2,330 and market cap-weighted funds like 00850, you are no longer betting on a mirage. You are aligning your capital with the structural engine of the global economy. These companies drive the modern world. Their growth is not a marketing promise, but a reflection of global demand. When you see the divergence on your screen, the choice becomes undeniable. One path leads to a slow, silent depletion of your net worth. The other path leads to structural certainty. You feel the difference in the momentum. The charts do not lie. You are not just rearranging numbers on an app. You are anchoring your future to the actual drivers of human progress. The data confirms it. The pivot you made is the only one that keeps your wealth moving in the right direction. This is not just a strategy shift. This is a survival decision. Your principal expands rather than evaporates. The shift is immediate and measurable. You are no longer trading your future for the temporary, false comfort of a monthly bank deposit. That was a trap that required you to sacrifice your foundation for a recurring taxable illusion. Now, observe the difference. Every dollar you keep invested in growth-oriented assets acts as a brick in your wall. It is not being drained. It is not being liquidated. It is compounding. You are constructing an unbreakable financial fortress that stands against the eroding pressures of inflation and tax. You can see the structural integrity of your account balance growing stronger each quarter. You are not waiting for a payout that leaves you poorer than you started. You are holding assets that command their own value and expand in influence as the economy moves forward. This is the difference between a leaky vessel and a secure stronghold. You have dismantled the cycle of depletion and replaced it with a self-sustaining engine. The focus is no longer on short-term gratification, but on the long-term density of your wealth. You are building something that lasts. You are securing your horizon. Tonight, do not just close the screen. Open your brokerage app. Log in and audit your holdings with cold, clinical precision. Look at every ticker. If your capital is still locked in yield-chasing instruments, pivot now. Do not wait for the next market cycle to prove you wrong. You have the data. You have the strategy. Now you need the discipline to execute. Prioritize total return over the short-term gratification of a dividend deposit. Shift your resources into assets that beat inflation and preserve your wealth for the long haul. This is the moment to dismantle the trap you were sold. Every minute you hesitate is a minute your principal stays exposed to unnecessary tax and erosion. Take control of your balance sheet. Make the move that secures your independence. If you are ready to stop chasing shadows and start building a real engine of growth, leave a comment below saying ready to win. Your future is not a matter of luck. It is a matter of the decisions you make right now. Lock it in. Pivot your strategy. Start today.